Here we have the 2-hour price chart for AMC Entertainment Holdings Incorporated, stock ticker AMC. So as we can see here, share prices are starting to show some evidence of decline here. This might look like a terrible piece of news. I don't think it's as bad as some other people probably think it is, and I'll try to explain the reasons why here. First, there are some negatives that we have to point to. I mean, one would be there's sort of a major failure here at this 575 level, which is now a double top. That's a bit of an ominous chart pattern, which shows that resistance has been tested on two different occasions, and we've seen a price failure here two times. So what this really means is that it's going to be a bit more difficult to breach this area again in the future. Rather than if we were to compare this type of scenario to a single top or something like that, you'd be much more likely to break through those areas going forward. So now that it's a double top, it does create a bit more of a problem for share prices once we start to actually turn around once again. So currently, the other major issue here is the fact that we have lost support at 515. This is a bit of a problem because it really does now call into question this $5 level. A lot of people are kind of focusing on this level as kind of a line in the sand, um, you know, doom and gloom, or, are things rising? Are we above this $5 mark? I tend to not believe in things like that. I don't. I generally think that these numbers are just random numbers. I don't see a difference between $5 and 503 or anything. These are random numbers. There's nothing special or significant about the $5 mark, even though a lot of people do tend to focus on those levels. I would have argued that the 515 level would have been more important than the $5 level. I'm not really concerned about this level, even if we do break below here. Um, you know, Other things that you really should be looking at would be the share price itself in relation to its exponential moving averages. So here, what we pointed to in the prior video was the fact that we were breaking below this yellow line and orange line. The yellow line is the 20-period exponential moving average. The orange line is the 50-period exponential moving average. So we did see a fairly clear break below here, and a closing value below here. You can sort of see that in this red candle here. Um, the bottom of a red candle is the closing price. As long if there's no wick, I mean, there's no wick on the bottom of this candle. You can sort of see that in some of the other candles. But if there is no wick on the bottom of a red candle, it means that the bottom price here is the closing price. So as we can see here, this price candle closed below the 50 period exponential moving average. So that is a bearish signal, and this does sort of explain why we did see this continued follow through here to the downside. Currently, what I've been pointing to in these videos is, you have to sort of imagine, where are the short sellers most likely to be located? Where are they most likely to start entering into their positions to the downside? And for this reason, I have been kind of pointing to this 575 level as sort of a possible area of concern. Now we have seen that here because we have broken through support. At the same time, you can probably expect to see some buying activity near this $5 level. But for the most part, I wouldn't really be concerned with this decline unless we see a break below this 490 level. This is a level that I've mentioned several times in the past. This really does come all the way back here. It really posted during this would be the June 27 trading period, where price highs are really what kind of essentially formed this price zone. So we had this level worked as a resistance zone in the past, and resistance zones that are broken to the top side, which we can see here. It's all these arrows here. We're seeing they kind of break upward to the top side. This is why I've been watching this level. Um, Resistance levels start to become support levels once they're retested again from the top side. So, currently we're trading just above $5 per share. It's quite possible that we could close today below $5 per share. I mean, I'm not going to try to predict the stock within, a few cents like this. So could we see a close today below the $5 mark? It's obviously possible. We're very close to that level right now, but I wouldn't be concerned here just yet until we see a break below this 490 level. In addition to this historical price zone here, we do have to consider the fact that The 200 period exponential moving average is rising into this area. We are kind of seeing an upward slope in this blue line here. So, this is starting to come into contact with this 490 level. It's not quite there yet. We're still a ways away, but it's not very far at the moment. We're roughly at 482 with this 200 period exponential moving average, and the price on that I'm looking at here is 490. So it's not even a full 10 cents away. Current price action is actually farther away from the 490 level than this moving average is away from that 490 level. So, and it is rising, and it will continue to rise as long as share prices are above the moving average. So, this should come in contact with this zone relatively quickly, and then this should ultimately provide some additional supports to this 490 level. That will work in addition to these sort of historical resistance zones that would be expected to now start working as support. So overall, this is not a good price movement. I'm not trying to sugarcoat things here. And overall, we do have to point to the relative strength index reading, which has broken its uptrend momentum trend. So that's a bit of a cause for concern here too. But then you have to balance that a bit with the fact that the relative strength index X itself is moving into oversold territory. That's this purple line here. We're currently looking at a reading of this would be about 35. A reading at 30 would be considered to be oversold. So once you start to get into that type of condition, you need to see one of two things. You either need to see a break to the top side, or at least a period of sideways consolidation. You could still see a period of sideways consolidation and allow this relative strength index to move out of oversold territory. But what you're most likely to see is a bounce. And since we're currently at 35, this does suggest that we're not very far away from the 30 level. And if we did continue to move a bit lower here, and even let's say close below this magical $5 level that so many people are looking at, this does sort of suggest that you would start to see a bit of a bounce here at 490. So to me, these are all of the reasons that this is currently my main line in the sand here. I understand the fascination with the round numbers and things like that, but to me, those don't necessarily have a lot of technical significance. You need to see signals on the price chart to sort of confirm or deny those price levels. So I'm not really seeing, $5 as being particularly significant on this chart. I think that the 490 level is much more important. So even if we see a drift down into that area, I would still expect to see an upside reversal at that point. So here's the current market analysis for AMC Entertainment Holdings Incorporated, stock ticker AMC.